Hello and welcome to BYJU'S Exam Prep IAS. Welcome to another session of economy this week, wherein we are taking all the important economy related articles and we'll be having a discussion on all of these articles. For this video, we are going to cover the articles which have appeared in various business related newspapers from 26th November to 2nd December 2022. Let's begin the discussion. The first very important article, which I'm pretty sure all of you have come across in the last 1 week, is the launch of CBDC, that is e-rupee, the retail version of it. In simple terms, earlier the central government issued the CBDC, that is Central Board Digital Currency, for the wholesale transactions. Now for the retail version or the retail transactions, another version of CBDC has been issued. In simple terms, what is a CBDC? It's a digital currency. That is in much more simpler terms, if I want to define it, I'm pretty sure all of you have the currency notes as well as the coins in your purse or in your pocket. What if I take these currencies, convert them into digital form and give it to you? That is, rather than having, let's say, a 500 rupee currency note, physical form of it, what if I give you a digital form of it? You'll keep that particular picture in your mobile, and if you have to give to me, let's say 500 rupees, you'll simply transfer that particular one picture to me. Again, it's not that simple also, because the argument is, so many of you simply say, sir, what if I copy the picture and send it to you? So let's try and understand the basic idea of the CBDC e-rupee, that is the retail version. First and foremost, the central governments across many countries, they are trying to introduce the concept of digital currencies, because there is a tendency of the investors to move towards cryptocurrencies. In order to address this, at least on paper, in order to address this, the central bankers, many of them are either trying out the pilot project of digital currencies, and many of them already have introduced digital currencies. In India, the Reserve Bank of India earlier launched the CBDC e-rupee, the wholesale, the CBDC version of it, and now has launched the retail pilot of digital rupee, which has started from the 1st of December. And as per the data that has been published in various newspapers, many transactions have already taken place using the retail version of digital rupee. Now, what is this retail version of digital rupee? Let's imagine you have 1000 rupee cash, physical cash. You will deposit that into your bank account, and in return the bank will issue you, let's say, 1000 rupee worth of digital currency, that is the retail digital currency. Now many of you will ask me, sir, what is the use of this then? The use is that rather than having to carry physical cash, now you can simply carry the digital cash, and this 1000 rupee will be transferred into your wallet. And now from the wallet, you can transfer it to your peers, that is, let's say your friends, family, etc., who again have this digital wallet, or you can make a payment to merchants using their QR code. So in simple, the idea is that rather than having to carry physical cash, now digital version of the cash can be carried. This can be transferred from one account to another account, that is from digital wallet, one wallet to another wallet, whenever you want to transfer it to, let's say, your friends, or you want to make a payment. Now in case of pilot project, Reserve Bank of India has identified certain public sector banks, that is State Bank of India, private sector banks such as ICICI Bank, Yes Bank, IDFC First Bank, and these banks will be providing the services or will be launching this pilot phase of digital rupee, that is a retail version, in the cities of Mumbai, New Delhi, Bangalore and Bhubaneswar. And once the pilot phase is over, Reserve Bank of India says more digital rupees would be issued, and the number of states, or let's say cities, which are covered will also be expanded. Now, what is the reason why RBI is doing all of this? As already mentioned, one objective is to reduce the dependency on cryptocurrencies, or the movement of investors towards cryptocurrencies. Although it is doubtful whether the investors will move back or will have a higher confidence on the digital rupee like this? For a very simple reason, RBI says cryptocurrencies are decentralized. That is, nobody or a central bank is not issuing these cryptocurrencies. So they do not have any value. Whereas either you talk about digital rupee or the physical rupee, currency notes or coins, it is the RBI. Although many of you will simply point out, but sir, I read coins are issued by the government of India. Let's say distributed. And moreover, whenever you talk about currency coins and notes, the higher denomination is always given in terms of currency notes compared to currency coins. So whenever you talk about the currency notes or coins, there is certain authority which is actually issuing it. Now many of you will ask me, sir, if that is the case, why is that investors are running behind cryptocurrencies? Why not follow the rupee here? Follow the physical or digital currencies? The answer to this is very simple. The currency notes are issued, currency coins are issued, but the value using the currency coins, that is the value of goods and services that you can purchase over a period of time, has been affected because of inflation. And whenever money supply increases, when RBI does that, when money supply increases, the purchasing power automatically will go down. Whereas in case of cryptocurrencies, this generally does not happen. That is a precise reason the debasing is not observed in cryptocurrencies. Hence, investors generally prefer cryptocurrencies compared to the physical currencies, or let's say the digital currencies here. Another objective why RBI says we want to promote the retail version, or let's say the wholesale version of the digital currency, is very simply in order to reduce the cost of printing of the currency coins or currency notes and minting cost of currency coins. Annually, lot of expenditure is incurred in basically printing or minting and the distribution of all these the currencies. Now rather than that, if I shift to a digital version of the currencies, then the cost of printing, cost of management of the currencies automatically will come down. So these are some of the very important points, citing which the Reserve Bank of India has launched the retail project of digital rupee, which has already started from 1st of December. Now based on this, I have given one question. Let me solve the question, then we'll go back to the article. Consider the following regarding e-rupee, that is a retail version of it. It will be issued directly by RBI to customers. Underline the term RBI to customers. No doubt it is issued by RBI, but not directly to customers. RBI has given it to the banks. Banks are issuing it to customers. First statement is wrong. These are allowed only for customers to merchant transactions. Again wrong. Why? It is not just customer to merchants, it is also customer to customer, that is peer to peer. If I have this digital rupee, I can transfer it to you. I can use the same digital rupee to pay to a merchant also. So second statement is also wrong. Right option for the question is option D, neither one nor two. Now related to currency, one more question. That's the reason I have clubbed both of the articles here. Regarding demonetization, I'm pretty sure all of you have heard of this, that Supreme Court of India is hearing matters related to the concept of, or let's say the policy of demonetization that was conducted by Government of India many years ago. And very recently there was a very interesting discussion that took place at the Supreme Court level regarding the issue of demonetization itself. During the demonetization, what Reserve Bank of India stated was, from 9th of November to December 31st, 2016, the customers or the people, whoever has the old 1000 rupee as well as the 500 rupee currency notes. Although I'm using the term old here, we are discussing this in 2022. That's the reason I'm saying the term old. At that point of time, whatever were the existing 500 and 1000 rupee currency notes, they were demonetized. So demonetized means they would not carry any value in the market post a certain time period. Hence, the Reserve Bank of India asked all the customers or the people who are holding these currency notes to go to the respective bank, get them exchanged with other value of the currency notes. Now the discussion that has been given here is an interesting one. Supreme Court judge or the justice in the Supreme Court has raised one very interesting situation. The situation is that what if a person has a lot of these currency notes, the old one mind you, and they have stored somewhere, they have hidden it somewhere, and they are in a coma. And many of you will simply say, sir, if they are in coma, their children must know. Let me ask you a very simple question. How many of you have not stored, or how many of you have stored the currency notes in only one location that you know of? Nobody else in your household actually knows the location of it. In the same way, especially the women in the household tend to store the currency notes, obviously higher denomination, higher value currency notes, not 1 rupee or 5 rupee currency notes, and they only know that location. And the same situation has been picked up by Justice, right, yes, Abdul Nazir, who basically stated that what if a woman in a household has stored some of the currency notes, the old one, that is 500 and 1000, and the woman is in coma, and the children don't know where the currency notes are actually hidden or kept. And the time period, that is November 9th to December 31st, is over. Now the woman has woken up from coma, and the woman has a lot of these currency notes, and RBI says, sorry, the time period is over. These currency notes are useless now. Don't you think this is a very legitimate request of the woman? This is very valid request that has been placed by the woman to exchange the old currency notes with the new currency notes. And in this context, RBI's hands are also tied, because the time period which was prescribed, the time period is over. And in this article it says there are such 700 or over 700 such applications where there could be a valid reason cited by the customers or the people who are holding old currency notes, and they want to be exchanged, or they want these notes to be exchanged with new currency notes. And RBI so far has not accepted these applications, because RBI says my hands are tied, the time period is already over. And look at all of this situation. Supreme Court of India cited two very important sections. Please remember this, can be asked in UPSC Prelims. That is subsection 2 and 3 of section 4 of the specified banknotes cessation of liabilities act. Important, please remember this. I don't expect UPSC to ask you the whole act. They might simply say these provisions which are cited in the newspaper are related to what. And in the same article, the information has also been provided. The subsection 2 of this cessation act says that it empowers the central bank, that is the RBI, to conduct an inquiry into such applications, satisfy itself about their genuineness, and credit the value of the old notes in the KYC compliant bank accounts of the claimants. What do you mean by that? Under this subsection of section 4 of the specified banknotes act, the Reserve Bank of India has the power to look into the application, and if Reserve Bank of India satisfied that there is a very much legitimate course or very legitimate action to be provided, because the reasoning that is provided is acceptable to RBI, hence RBI in such cases can accept such applications, exchange the currency notes. Now many of you will simply say, sir, agreed, subsection 2 provides this. What about subsection 3? The same article also provides the information. What if, imagine you are the RBI governor, I am the applicant, I have given the application for you to exchange the currency notes, you somehow do not agree to that. You have rejected my application. Then the subsection 3 actually comes into picture, under which the applicant has the time period of 14 days. Up to 14 days time period is given to the applicant, wherein the applicant can basically again appeal against the order of Reserve Bank of India. So these are the two very important subsections of the specified banknotes act, can be asked in UPSC. Please make a note of this. So this is one more article where Supreme Court of India, hearing petitions regarding demonetization, has talked about some of the sections related to Reserve Bank of India where the currency notes could be exchanged even after the time period is over. Now the next article, important article regarding remittances. What is this idea for remittances? Imagine you as a software engineer, or you are, let's say, a worker in a particular company. You are sent to a foreign market, either Middle East or European countries or let's say to USA or to Australia, with the India-Australia FTA coming into force, imagine you are sent to Australia for a period of 3 months or 6 months. And once you go there, you will earn in foreign currencies and you will bring back those foreign currencies when you come back to India. Or else you are still there in the respective country and you will keep sending the amount, part of your earnings, to your house, which is obviously located in India, either to your spouse, to your let's say mother or the father or other relatives. So whenever you talk about the funds which are coming back to India like this, these are called as remittances. And historically speaking, let's say for last many years, it has been India which has been the major recipient of inward remittances. The term inward remittances is important here. What do you mean by this? Just like you go to USA, send dollars to India, in the same way a software engineer from USA or a consultant from USA can come to India, work in India and take out rupees. Perfectly possible. So remittances are generally two types, inward remittances and outward remittances. And whenever you talk about the total remittances, India historically, at least for the last many years, has been the top inward remitter in the global market. And these remittances play a very important role, especially in a country such as India. And if you know that in the last 1 year, huge amount of dollars have gone out of India. The forex reserves have actually come down by more than $100 billion in the last 1 year. In such a country, the amount of remittances that will bring foreign currencies into India, this is very important. And what is the latest information here? As per the World Bank report, India will continue to receive the highest amount of remittances for the year 2022. That's the first point. Right, for this year, India will be the highest recipient of remittances. First. Second, the remittances compared to last year will be increasing by 12%. Compared to last year, the remittances will be increasing by 12%. So these are two very important factual informations provided in the article. But let's go beyond this. What is the reason why the remittances are increasing in India? What is the reason behind it? Following are the very important reasons. Let's go one by one. First one, until last couple of years ago, lot of these migrant labor from India, which moved from India to, let's say, rest of the world, used to work in informal jobs, especially in the Middle Eastern countries. I hope you understand. Lot of them used to work under the informal jobs in the Middle Eastern countries. But as per the World Bank report, there is a changing trend now. And the trend says that rather than getting more and more remittances, or let's say getting more jobs in the informal nature in the Middle East, now more and more migrant labor from India are getting very good quality jobs, better quality or skill set required jobs in developed economies such as, let's say, USA or Australia for that matter. And when these kind of jobs are obtained, obviously the amount of salary that they will receive would be much higher. And because they are receiving a much better income now, the amount of remittances that are coming into India also have increased. That is one very important reason. There is a change in the nature of jobs that are being provided or that are being earned by the migrant population from India. That's a first very important reason. Second very important reason is, if you talk about these Middle Eastern countries, especially Gulf Cooperation Council, GCC countries, the governments there very recently have announced that, because, or even though they have not announced, the basic argument is the crude oil prices in the last couple of years have actually, or last couple of months, the crude oil prices have improved. During the pandemic, it took a hit, but now it is slightly picking up. It has been much better. And when the crude oil prices are improving, obviously the earnings done by these countries has increased. And when the earnings has increased, the natural outcome to that is the demand or the total income of the economy has increased, means the demand for labor for doing project A, B, C, D within the economies also has improved. That is the second very important cause. And the third very important cause for this higher remittances is that Many labor which came back to India during the period of pandemic, they are vaccinated. And because they are vaccinated now, using these certificates, now they are able to get jobs outside India, especially in the Middle Eastern part. These kind of informal jobs, because the people, or let's say the migrant labor is vaccinated in India, they are able to go back and get hired for the employment now. So these are some of the reasons which have been cited by the World Bank report, which says that the amount of remittances will be historic high in India and will be crossing more than $100 billion for the current year, that is 2022. Now based on this, I've given a very simple MCQ. Which of the following institution has published the report titled Remittances Brave Global Headwinds? And because we have already discussed, it should be very easy for you. It is the World Bank, which is the authority which has published. Many of you will say, sir, such a very easy question. But mind you, in UPSC, there is no discussion in the article first, then they will not ask you a question. They will directly give you a question titled report like this. You should be able to find out. Remittances reports are generally published by World Bank. Hence, option C is the right option here. Let me go to the next article. RBI regulations on urban cooperative banks, UCBs. In the last couple of years, Government of India as well as RBI have been tightening their basically regulations on the UCBs. Just to give you a glimpse of it, Government of India amended Banking Regulation Act in the year 2020, and as a result of this, more and more regulatory powers have been given to Reserve Bank of India to regulate the cooperative banking. And after the amendments were passed, RBI has kept on increasing its regulations month after month or quarter after quarter on regulating these cooperative banks. And the latest set of regulation that RBI has announced is the urban cooperative banks now will be divided into 4 tiers. As against the earlier practice of dividing UCBs into 2 tiers, now the UCBs will be divided into 4 tiers. Now many of you will ask me, sir, what do you mean by tier? Either you call it as a tier or in simple terms into 4 different levels. Although I would recommend you to use the technical term, that is a tier. Right? In simple terms, you can also understand it is nothing but division of the urban cooperative banks into 4 levels. That is tier 1, tier 2, tier 3 and tier 4. Now, how do I divide these particular UCBs? First, the UCBs which will have deposits up to rupees 100 crore will be classified as tier 1 UCBs. More than 100 crore and up to 1000 crore deposits will be tier 2. More than 1000 crore and up to 10,000 crore deposits will be tier 3, and more than 10,000 crore rupees worth of deposits, if these are there, these are called as tier 4 UCBs. Now many of you ask me, sir, agreed, the classification, yes, we understood. What is the reason? A simple question to you people, just think of it. Don't you think a bank which has a higher amount of deposits, the regulations should be more strict, more stringent on such a bank? I hope you understand my statement here. A bank which has got a higher amount of deposit, obviously the regulation of Reserve Bank of India on such a bank should be much more stringent. It should not be very easy for them to divert loans or evergreen the loans, or basically keep on having higher concentration risk or issues. So what Reserve Bank of India says is, first and foremost, cooperative banks are very important. They have collected a lot of deposits of the people. People in search of better returns have put their faith in the cooperative banks, and in the past couple of years you must have seen issues related to cooperative banks such as Punjab Maharashtra Cooperative Bank. Now as per the latest guideline, these will be divided into 4 tiers, and RBI says whenever the tiers will change, the capital adequacy ratio or credit to risk weighted assets ratio automatically will also change. Right? What do you mean by this? As per the latest guidelines, the tier 1 UCBs shall maintain a minimum capital adequacy ratio of 9% or credit to risk weighted assets ratio of 9%, and right? The tier 2 to tier 4, that is 2, 3 and 4 urban cooperative banks, the capital adequacy ratio or CRAR ratio for these 3 levels of UCBs will be increased to 12%. Now, I would request you to please go to the basics of Basel guidelines and understand the concept of capital adequacy ratio. In a nutshell, what I can simply tell you is, a bank which has a higher amount of a capital adequacy ratio, generally it is preferred. Is it okay? Having a higher capital adequacy ratio is preferable. But what does it mean? If you have a higher capital adequacy ratio, it simply means you have a position to absorb, or you're in a better position to absorb even if the losses are bigger. And that is a precise reason you must have seen the capital adequacy ratios have increased or have been increased by Reserve Bank of India compared to the global capital adequacy ratio. Because under the Basel guidelines, generally the requirement of a capital adequacy ratio is 8%. Or credit to risk weighted assets ratio or capital to risk weighted assets ratio is 8% as per Basel guidelines. But Reserve Bank of India within India on the banking sector has stated that it will not be 8%, rather I will change it to 9% so that the banks in India, one, will be able to accumulate more and more capital, raise more capital, either tier 1 capital, tier 2 capital, etc., raise more capital, and will be in a better position to absorb losses even if the losses are slightly on a higher side. So that is a precise reason those UCBs with a higher deposit value, obviously they are facing a higher risk. Hence, we want to ensure that they are going to hold more capital to absorb losses which might occur in the future. Now, based on this, I have given a question. Consider the following. CRAR, capital to risk weighted assets ratio for all the banks is same in India. I am pretty sure already you know the answer. It is wrong. The perpetual instruments issued by the banks are considered as a part of CRAR. Right, capital to risk weighted assets ratio. Is it part of CRAR? Just think of it. Right, the option is yes. Now many of you will ask me, sir, what do you mean by perpetual instruments? Generally, whenever you talk about capital adequacy ratio, the formula is the total capital of the bank divided by risk weighted assets of a bank, RWA. And when you talk about the capital of the bank, generally the capital is divided into 2 parts, tier 1 capital and tier 2 capital. Again, don't say, sir, it is the same as the classification in urban cooperative banks. Please don't be confused. That tier is basically the division of UCBs, and this tier is the division of capital held by the bank. Tier 1 capital, tier 2 capital, and generally whenever you issue a perpetual instrument such as, let's say, tier 1 bond or additional tier 1 bond, these are perpetual instruments which are part of the tier 1 capital. Hence, we can simply say that the perpetual instruments issued by the banks are considered as a part of the ratio here. Second statement is correct. Right option for the question will be option B, only 2. Next article is regarding microfinance. Micro lenders are stepping into secured loans to bring down risk. Now, what do you mean by this? First and foremost, understand this. Microfinance lenders generally target the households where the annual income is up to 3 lakh rupees and provide loans. But one of the very important features of the loans that is provided by the microfinance institutions is that these are unsecured loans. These are unsecured loans. Now many of you will ask me, sir, what do you mean by unsecured loans? There are 2 types, secured and unsecured. Secured means whenever a loan is given, a collateral or a security is collected. For example, imagine you're a bank. I'm taking a housing loan from you. I will give you a security, I'll give you a collateral. What is a collateral? The housing document is a collateral. Now some of you will ask me, sir, what is the use of it? Yes, I collected the housing document, but what is the use of it? Imagine I will not repay the loan to you. I will stop making the payment because I've been fired from the job. Now because I don't have the income, I will not repay the loan. Now you will simply wait for a certain time period, then you will take away the house. The house itself is a security or collateral. So whenever you talk about microfinance lending, remember a point here. The type of loans that they provide, most of them are unsecured. Again, I am using the term most of them. Why? Is it always that all the loans given by microfinance institutions are unsecured? Answer is no. Why? Reserve Bank of India until very recently allowed 15%, up to 15% of their loans to non-MFI customers. Meaning what? Up to 15% of the loans can be issued by these institutions to the non-MFI customers, meaning these were secured loans. In simple terms, these were secured loans. Now RBI has increased the limit from 15% to 25%. It has increased from 15% to 25%, which means now these MFIs will be able to provide 25% of their loans by collecting security, by collecting collateral. So first very important point, when the banks will collect security on 25% of the loans that they are issuing, or the institutions collect the security on 25% of the loans that they are collecting, don't you think the amount of security held by the bank or collaterals held by the institution automatically increase? That's the first outcome. Second, it will reduce the risk faced by the MFIs. That is obviously, if you are going to collect collateral on more loans, obviously the risk that you are facing will come down. Third, it will also help in diversification of the loans. It will also help in diversification of the loans issued by the MFIs. And the fourth very important point, it is helping the MFIs to retain the customers. Generally, it has been observed that as a customer, initially I will take a loan from the MFI, unsecured loan, but over a period of time, I want to borrow different types of loans. I want to take, let's say, a loan for a different purposes. That could not be provided until now because the limit was very lesser for the MFIs. That is, non-MFI loans were very lesser. Now, because of a higher leeway, higher freedom for the MFIs, now they'll be able to retain more and more customers within their lending ambit as such. So these are certain very important points regarding the MFIs which have been allowed to focus more or have been allowed to give more loans to the non-MFI customers. Next article is regarding DBT in fertilizers. In the earlier videos as such, we have been discussing the concept of DBT and also the issue related to fertilizers. But there is one very important point mentioned here, right? Follow this very carefully. Although we have implemented DBT in fertilizers, what is DBT? Direct benefit transfer. The idea for DBT is very simple. We are going to identify the right beneficiary. The beneficiary could be getting, let's say, the assistance or subsidy in the form of cash or kind. That identified beneficiary now will be able to receive that benefit. That's the whole idea or the objective of direct benefit transfer. Many, that is hundreds of schemes have been brought under the direct benefit transfer as of now. Now, one such scheme is fertilizer subsidy, which has been brought under DBT. But having brought under DBT, there was one issue that was plaguing the implementation of fertilizer subsidy. That is, under DBT fertilizer, the farmer will go to the distribution shop, that is a fertilizer shop, provide, let's say, Aadhaar credential, prove that the person is a farmer, and now the farmer will be able to purchase fertilizers. But there was one issue. What was the issue? I would never know what would be the land on which the farmer is cultivating. I understand how much of the land the farmer is actually cultivating upon. And this is important. Why? The amount of fertilizer that is produced in India, mind you, is less than what is the actual demand. And as a result of which, we end up importing a lot of fertilizers. So already there is a pressure or a burden on, let's say, the market prices, because the international prices could change, automatically it will have a huge impact on the market prices. In order to contain market prices, the government of India has to provide a lot of subsidies, which means a fiscal burden on the government of India. Now at this point of time, imagine a farmer actually requires 2 bags of urea. The farmer actually requires 2 bags of urea. But because the farmer wants to supply more and more fertilizer in order to increase the production, he might simply end up purchasing 3 bags of urea. Now there is no tool that is available with the government to find out what is the actual requirement of the farmer. And as a result of this, rather than purchasing 2 bags, if the farmer purchases 3 bags, don't you think, one, there will be misuse of this fertilizer. The farmer will end up applying a lot of urea in the field, which also means it could also mean that there is a shortage of this fertilizer for another farmer. The other farmer who might actually require the urea, because we import a lot of it, suddenly there is a rise in the demand. Let's say monsoon is very good, suddenly there is a rise in the demand for urea. There might be a shortage for another farmer. So there could be a mismatch between what is the supply and demand despite having a DBT in fertilizer. All of this happens because we don't know how much farmer actually requires. Now, in order to address this, they want to implement another version within the DBT fertilizer. That is, they want to introduce a new system where how much is the land upon which the farmer is cultivating, that data will be fed into the system. That data will be available in the system. Now imagine I am the farmer, I'll come to the fertilizer shop, I'll provide my Aadhaar credential, and the system says because the farmer is cultivating on a piece of land, the amount of urea that is required is only 2 bags. Now the shopkeeper will be issuing only 2 bags of urea to the farmer. This will be curbing the misuse or misalignment between the supply and demand. So that is what is being proposed by Government of India under the concept of the new DBT model for fertilizers. Right, so this is the discussion regarding the DBT. One more article again related to the agriculture sector only. That is, Government of India has allowed for online sale of pesticides. Very recently, the government has allowed the online sale, that is the sale of the pesticides through the e-commerce platforms. Many of the stakeholders or the participants in the domestic industry have hailed the decision of the Government of India. And equally on the other hand, there are certain concerns which have been raised by other experts regarding this decision of the government. First and foremost, the objective of this is to ensure that the pesticides are available on the platform, that is e-commerce websites, or let's say the platforms, and the people who want to purchase it can directly go to these platforms, order and purchase. And as a result of this, the expenses which were earlier incurred for marketing, transportation, etc. would be minimized, and the buyers will be able to purchase these pesticides at a much lower prices. At least the prices should come down. That is the objective. Having said so, the concern that has been raised regarding the allowance, or let's say the decision of the Government of India to allow the online sale of the pesticides is that many of the experts have raised the alarm bell over the sale of fake pesticides or counterfeit products in the website. They are basically arguing that with this decision, it will become very easy to sell the fake products. I'm pretty sure all of you have experienced at one or the other points of time when you order from online, although the picture looks very genuine, you will order it, you will pay for it. Once you receive this particular product, either it could be an electronic product or a book that you wanted to read, etc., it will be a fake product, not the original product. So the argument is that with this announcement of the government, fake products of pesticides or the sale of these fake pesticides should or will increase, and that will affect the buyers in the market. Having said so, Government of India also says there are 2 very important regulations. There are 2 very important points or the guidelines that everybody has to follow. What are the guidelines? 1. Imagine you are an e-commerce platform. I am a producer of the pesticide. I want to sell the product using your platform. Then the Government of India simply says, before allowing me to sell the product on your platform, you will have to check whether I have a valid license or not. Whether the appropriate authority has issued a valid license to me or not, check it, only then allow me. Second, be it seller or the platform provider, etc., everybody on the selling side will have to conform, right, or comply with the relevant rules and the acts of the Consumer Protection Act. So these are the 2 very important guidelines which Government of India says that all the stakeholders will have to follow in order to sell the pesticides using e-commerce platforms. The next article is regarding cess. Simple article here. The states very recently have asked the central government to reduce its reliance on imposing cesses and surcharges and collecting lot of revenues. Now many of you will be thinking, sir, what is the meaning of all of this? In simplest terminologies, cess is a type of a tax which is imposed by the government. Sir, only government? Of course not. But focus on the government of India here. So cess is a type of a tax which is imposed and collected by the government. But the speciality about either the cess or surcharge is that it is entirely the decision of the government of India either to distribute part of it or keep the entire amount with itself. I hope you understand this. Right? The central government, imagine, I'll take a very simple number here. Imagine the product which is being sold in the market is worth 100 rupees. The tax rate is 16% and let's say the cess rate is 1%. So government will be collecting 16 rupee tax and giving part of it to the states. And will be collecting 1 rupee cess, and now it is entirely up to the government what will be the usage of this cess. And generally, whenever the cesses are implemented, government has to introduce a bill and has to say for what purpose the cess is introduced, how the funds which are raised can be utilized. Because cesses are always imposed with a specific objective. For example, education cess. That is now has been converted into healthcare and education cess. Earlier there was a Krishi Kalyana cess, Swachh Bharat cess. So whenever cesses are imposed and collected, these are imposed and collected for a specific objective. But the states are not concerned about the objective here. The states are concerned that if you wanted to collect, let's say 17 rupee tax, I'll take the same number. If you wanted to collect a 17 rupee tax, rather than imposing a cess of 1%, you should have increased the tax rate from 16% to 17%. And what would be the impact? When the tax rate will automatically increase from 16% to 17%, no doubt you will be able to impose and collect a 17 rupee tax. But now from this 17 rupee, the states would be getting higher amount of devolution. Compared to 16 rupees, now the states will get higher amount of tax devolution. And to prove their point, the states have given a data here. They are saying that a decade ago, 2011 and 2012, the reliance, that is out of the total tax revenues, the center used to collect somewhere around 10% in the form of surcharges and cesses. Now this is around 25% plus, which means a lot of tax revenues collected by the government are in the form of cesses and surcharges, and because the government is not under any compulsion to devolve or provide these cesses and surcharge revenue to the states, it simply means the states are falling behind in terms of their revenue collection. Falling behind in the sense, if rather than increasing the taxes by imposing cesses and surcharges, if the government had simply increased the tax rate itself, it means the government would have collected no doubt higher amount of tax revenue, devolved more amount of tax revenue to the states. That is one point of the concern that has been raised by the state governments with the central government. And apart from this, another point of discussion that was there in the article is the GST compensation cess. The central government has provided the last amount or the last tranche of the GST compensation cess to the states. After this, remember this, after this there is no GST compensation cess that will be provided, or the compensation cess that will be given by the central government to the states, because the 5-year duration, 5-year tenure of this is over. But having said so, remember the next point very carefully. Despite the 5-year tenure of the cess compensation or compensation provided by the center, the states, the cess is not yet withdrawn, the cess will continue. Many of you will be scratching your heads thinking, sir, if the government doesn't want to provide compensation, then what is the objective? Why government is implementing the cess, continuing with the cess? The argument is simple. Because of the pandemic, the amount of compensation that was supposed to be paid by the center to the states suddenly expanded. Center borrowed money and paid the amount to the states. Now to repay this borrowing, center says, I will continue to impose a cess, but do not provide any compensation to the states. So these are the two very important points which were discussed in the article here. The last article for the day, the GDP growth rate for the second quarter. Again, you don't have to buy out all the data here. The trend has been provided. You can just see that there was a dip, there was a recession, then there was a recovery in the economy, again there's a blip, again there is a recovery. But what are the points you need to observe? The gross value addition for the second quarter was 5.6%. Okay, the gross value addition, I've written Q2 here. Q2 basically stands for second quarter. Don't say what is this Q2, sir. It is second quarter. First quarter will obviously start from the April, May, June, and second quarter July, August to September. And you can see the data here, July to September. So the gross value addition has grown at 5.6% and the GDP growth rate for the second quarter is 6.3%. Right, all the government of India says this is representing a recovery that is continuing. But more importantly, you need to observe certain important points here. One, during the same time period, there was a discussion regarding index of the 8 core industries. The index of 8 core industries, and for the month of October, the index of 8 core industries has contracted to 0.1%, one of the lowest. Almost negligible, almost no growth in the 8 core industries. Compared to this, in the month of September, it was much higher. So that is a cause of concern. And the second one is compared to the pre-COVID level, right? That is the GDP of 75 lakh crore rupees. That's a GDP value in the first half of 22-23, right? The second quarter, that is comparable to, right, the pre-COVID level. Right, it is comparable to pre-COVID level, which again government of India says that represents there is a recovery that is taking place in the economy. So these are some of the points. Beyond this, please don't buy at any data related to this. Data quarter wise will keep on changing, and by the time you write the exam, one more quarter or two more quarters data will be available to you. So these are certain important article regarding these are some certain important points regarding the article provided here. So these are all the relevant articles from 26th November to 2nd December which have appeared in different business related newspapers. If you like the initiative, hit the like button, provide your valuable comments in the section below, and if you have not yet subscribed to BYJU'S Exam Prep IAS, kindly do it now. Thank you. Have a great day.